Let's quickly check in on Wall Street first before we check in on all the other global markets. And on Wall Street, stocks are tracking what we are seeing play out across Europe, and the market there is down. That's the Dow Jones Industrial Average, which is down over a percentage point, well below, actually just below the 12,500 mark. The rub-off really from Europe playing on Wall Street, and you are seeing Europe under severe stress in today's trades. Spain is off 3%, Italy is off 2%. All the other key markets across Europe are under pressure, simply for the reason that Spain has made it official now that its banking system will need a bailout. They have made a formal request to the European Union for a bailout. What you are seeing on your screens is Spain, which is down 3%, as we just mentioned. Portugal is down about 0.6%. And some of the other key markets like Frankfurt, which is down 1.8%. Greece is down over 6% after a number of days of green ticks that you saw for Greek equities over the last few days. But let's get a better sense of how the markets in Europe and Asia are, and we've got our colleagues from Reuters, Kimberly Lim, joining us on the show from London. Kathy Yang comes in from Hong Kong. Kim, let's start with you. The European markets have opened the week significantly lower. Tell us what's weighing on investor sentiment.
Well, stocks looking down around a one-week low as we kickstart the week here in Europe. There's just not a whole lot of confidence out there right now. Worries about global growth are weighing on sentiment after the string of shady economic data we've seen of late globally. And, of course, as Spain makes the formal request for EU aid, there's a lot of worry about the country's debt problems. Now, the big focus here this week is the EU summit, when, again, European leaders will meet to try and thrash out a plan of action for Europe's debt crisis. Expectations are pretty muted for the most part. There's a fair amount of scepticism that the summit will produce quickly enough. Looking around the market, growth-related stocks are leading fallers, banks, construction stocks, autos and techs all leading the slide south.
Kim, also tell us what's happening with the single currency today.
Well, it too is somewhat under the cosh this session. For much the same story as the equities market, the single currency is broadly down. Now, a lot of the market had been expecting more signs of progress at last week's meeting of Europe's Big Four. Instead, it rather contributed to the view that policymakers are struggling to get 100% on the same page and behind the same plan. So as we get nearer to that full EU meeting, there isn't a whole lot of hope. So cautious play for the euro right now, though some strategists are saying that we could see higher numbers in the run-up to the summit if there are signs of compromise on issues like debt mutualisation, the banking union and, of course, Greece's bailout terms.
All right, Kathy Yang, let's bring it to you. Asian markets slipped today. The Chinese market's dropping over 1.5%. Where did all the pain come from?
All that pain leads to the Eurozone. Nobody in Asia wants to put big bets ahead of that crucial EU summit this week. We have analysts at Barclays Capital expecting the summit to yield nothing strong enough, rhetoric or action, that would lead towards a definitive solution. And the upcoming summit comes as the latest factor data from Europe to the U.S. and all the way to China show renewed weakness. So Hong Kong shares slipped today, and stocks in Shanghai, they suffered their worst day in 3 weeks. Even Seoul shares did the same thing. It hit a 3-week closing low, and the Nikkei 225 index fell below its 5-day moving average.
Also, Kathy, we are witnessing the biggest currency depreciation among BRIC nations. Tell us what the outlook there is.
Just as the rupee is suffering from investor fright, so is the Chinese yuan. In this part of the world where BRICS are represented, the yuan's actually taken a dive today versus the U.S. dollar in reaction to the stronger dollar. Investors headed to the relative safety of the greenback as they sought shelter from the uncertainty in Europe. But the drastic nature of the drop was due in part to that 3-day weekend that we had in China, as Chinese markets were closed on Friday for a public holiday. The traders told us the rise in the dollar index and, by extension, the drop in the yuan was due to reduced expectations that the Fed is going to be launching a third round of QE, or quantitative easing.